Okay, let's talk about how much you should be setting aside in savings for taxes. So I suggest to all of my clients and any companies that I speak to create a tax savings account. That way, when it comes time for tax, to pay your taxes and to file your taxes, it's not such a huge burden. You've already set that money aside. So let's talk numbers. If you are the kind of person that's like too long, didn't read, not gonna watch this whole thing, ideally you will set aside 15 to 30% of your net income in a tax savings account. Now remember that your net income is not your revenue. Your revenue is gonna be all the money that comes into your business. Net income is gonna be that revenue minus any business expenses that go out. So if you made $100,000 in 2020 and you had $20,000 in business expenses, then $80,000 is going to be your taxable income. So anything that we talk about today, any percentages that we talk about today are going to be based on your taxable income number. Now, if you are self-employed, and what I mean by that is that if you're not on a W-2, if your business is set up as a sole proprietor or an LLC, you are subject to the self-employment tax. Self-employment tax is 15.3% of the net income in your business. So whenever you're calculating what your tax rate is, you're gonna have taxes based on your taxable income as a business tax. You're also gonna have self-employment tax at 15%. So your tax rate depends on what your tax bracket is. So it's anywhere from 10% to a little over 30%, depending on how much your net income is in your business. So if you are an LLC or a sole proprietor, you have an extra schedule on your tax return that's going to say how much your business made, how much the taxable income was, and then you are taxed on that amount, the self-employment rate plus whatever your tax bracket is. If you are a corporation, you are subject to corporate tax, which in 2019 was 21%. I think they're going to make some changes, especially for this next year, but you're going to have that corporate tax rate and tax on whatever you are paying yourself if you're paying yourself as a W-2. So all in all, 15 to 30% is a good balance. If you're an extra saver, I would get closer to that 30% amount. And then anything that you don't have to pay out in taxes, you get to take home as a bonus. You can pay yourself out a distribution with that extra money that's in there. If you are just starting, put as much in as you can, but trying to get towards that 15%, maybe even a little closer to 20 is probably a really safe number to keep putting aside in that tax amount. So again, this is on your net income. So if you are someone that wants to transfer money into a tax savings every month, then I would close out your books for the month. So we're at the beginning of November right now. So if you're looking at the month of October, if you've reconciled all of your accounts, you're looking at your profit and loss statement for the month of October, you see that you brought in $10,000, you spent $5,000 on business expenses, your net income is $5,000, then you're gonna set aside 20% of $5,000 into a tax savings. I hope this was helpful, and if you have any questions, just reach out and I'd be happy to talk through it with you.